Hi, this is Andy Filipiuk in Toronto for the week of December the 31st. Well, the numbers are in for 2018, and I'm happy to report that the Canadian permanent portfolio closed up 0.14% for the year. 2018 was a very difficult year. I'll be the first to admit it, with stocks and bonds all going down. Now, December was particularly interesting because we saw the Dow peak in October, but for the month of December, the Dow was down 8.9%, the S&P down 9.4%, and the TSX down 5.4%, while the Canadian permanent portfolio was actually up 1.7% for the month of December. So the portfolio behaved very well, with the hedges finally starting to kick in. Now with 2019, it's quite possible that this trend is going to continue. As I've mentioned ad nauseum, the central banks are going to start pulling money from the system starting this week, about 20 billion coming out collectively. So pulling money out of the system isn't going to help. When we pumped in 15 trillion, now they're pulling it out. Also, globally, economic numbers have been weakening quite quickly. Now we're starting to see this in the numbers that are being reported now. So it's quite possible that this bull market of stocks over the last 10 years may be on its last legs. Very interestingly, the Federal Reserve is now quite possibly done. The 2-year bond is at 2.5, and that's exactly where the Fed funds rate is, at 2.25 to 2.5. So the market is saying to the Fed, don't raise any more, and it's quite possible that the market cannot bear any more rate hikes. The Fed, however, wants to get back to normal as quickly as possible. They're going to be pulling out 600 billion out of the Fed's balance sheet this year, and trying to get rates back to more normalized levels, where savers such as pension plans, insurance companies, etc., get a reasonable return on their assets. So if we're done here at the Fed funds rate at 2.5, we're looking very similar to Japan, meaning we can't raise rates much further just because of the huge amounts of debt that we've built up at the individual, corporate, and government level. So 2019, watching what corporations report on numbers, but more importantly, watching what central banks say and do, will tell the tale. Very pleased to be in a safe, well-rounded investment that isn't entirely relying upon equities for performance. I'll be coming out with my write-up for the fourth quarter and for 2018 in the next couple of days. Thanks for watching.